structure in India. What is bank? A bank is a financial institution that accepts deposit from the public and creates a demand deposit while simultaneously making loans. Lending activities can be directly performed by the bank or indirectly through capital market. Structure of Indian banking system. Reserve Bank of India is the central bank of the country and regulates the banking system of India. The structure of banking system of India can be broadly divided into scheduled bank, non-scheduled banks and development banks. The RBI is India's central banking institution which controls the monetary policy of the Indian rupee. It commenced its operation on 1st April 1935 during the British rule in accordance with the provision of the RBI Act 1934, and in 1949 it was nationalized. The central office of the Reserve Bank was initially established in Calcutta but permanently moved to Mumbai in 1937. The central office is where the governor sits and policies are formulated. Sir C.D. Deshmukh is the first governor of RBI. Now let's see about the meaning of commercial bank. A commercial bank is a financial institution which performs the functions of accepting deposit from the general public and giving loans for investment with the aim of earning profit. The commercial banks are broadly divided into four types: public sector bank, private sector bank, foreign banks and RRB banks. Public sector bank means any government sector bank or institute that goes public, means that issue its share to general public. It also has a greater share of government, more than 50%, so that the main motto of social welfare other than maximizing profit remains. These are the examples of public sector banks of India. Private sector bank. Whereas private sector banks are those banks where management is controlled by private individuals and government does not have any say in the management of these banks. Maximizing profit is the basic motto. The above are the examples of private sector banks in India. Foreign banks in India. Foreign banks are those banks incorporated outside of India and operate through branch or subsidiary in India. Arunachal Pradesh Rural Bank is an example for foreign bank. Cooperative bank is a bank that holds deposits, make loans and provide other financial service to the cooperatives and member-owned organization. Now let's see the difference between the cooperative and commercial bank. Registration. Banking Regulation Act 1949, the Cooperative Societies Act 1904 of the concerned state. Function: to accept deposit from the public for the purpose of lending to industry and commerce. To accept deposit from the members of the public for the purpose of providing loans to the farmers and small businessmen with the motto of service. Main motive: to earn profit. Here the motive is service motive. Development banks, financial institutions that provide long-term credit in order to support capital-intensive investment spread over a long period and yielding low rates of returns with considerable social benefits, are known as development banks. The major development banks in India are Industrial Finance Corporation of India, that is IFCI Limited, in 1948. Industrial Development Bank of India, that is IDBI Bank, in 1964. Small Industries Development Bank of India, that is SIDBI, in 1989. NABARD, National Bank for Agriculture and Rural Development, in 1982.